periodically, the largest stocks in the S&P 500 index or other generic indexes are concentrated at the top with mega cap stocks. Most recently, the Magnificent Seven have been in the news a lot because they are seven of the top tech stocks who've dominated performance in over a relatively short period of time. And I know, Wes, we're with Wes Krill here today. And Wes, you've done some research on this and shows that once these stocks get into the top 10 of any benchmark, they pretty much fall down. It's not a reliable way to chase performance.
Yeah, with the Magnificent Seven, and for anyone who wants to remember the names of those companies, the acronym we found that is really stuck is TAN Mama. So don't ask me to go through all of them, but I'm pretty sure that one works. But you're right. They garnered a lot of attention because they drove the majority of the return within the U.S. market in 2023. And many investors have gotten excited by that and might even begin extrapolating that performance into the future, looking at those companies and saying, well, they're very successful. I believe this success is going to continue, and surely very strong returns will follow suit. So we went through an experiment where we looked at any company that joined the top 10 largest stocks within the U.S. market, going all the way back to 1926. And we set a line of demarcation for each one of these stocks, which is the first year when they were in the top 10. And then we looked at the returns of those stocks relative to the rest of the market in years leading up to joining the top 10, and then the years subsequent to being in the top 10. And what we found was the performance on the way up was much stronger than once they joined at the top of the mountain. If you just look at the 5-year period leading up to joining the top 10, on average, these stocks outperform the rest of the U.S. market by 20% annualized, 20% per year.
Wow.
But in the 5 years subsequent to joining the top 10, they actually underperform the U.S. market on average slightly by about 1% per year. And it's not because these companies stopped being successful when they joined the top 10. This is an especially relevant point for investors to think about today. In many cases, these companies continue to be successful, but what happened was the expectations for the companies became elevated. Expectations for companies translate into valuations, and that becomes harder for those companies to deliver strong returns because it becomes much harder to exceed expectations when they become that high. So something for investors to consider when they're starting to extrapolate that performance going forward.
So I guess the lesson here is if you want to try to time the market, you better be early.
Yeah, you want to get these companies on the way up for sure. Now, it doesn't mean investors are going to miss out on this. If you have a broadly diversified portfolio, you were likely holding these companies anyway. But I think for an investor who's tempted to go all in on these companies moving forward, well, historically, that has not been a good bet for outperforming markets.
Okay, so would you recommend to investors just not even try?
I think generally speaking, trying to time markets is something that is not consistently paid off for investors. And so if the question is, well, should I try and figure out what the next group of stocks is going to be that will outperform? That's just as challenging, because what you're looking for is to identify a company that is going to exceed investors' expectations, which means you need to come up with a better estimation of what the fortunes are going to be for those companies moving forward. One of the things I often compare this to is as you're climbing the corporate ladder in your career trajectory. Mm-hmm. So the things you did to exceed expectations when you're a junior associate aren't really going to move the needle as much once you're a vice president for the company. The expectations go up, which means to continue to get promoted, you need to continue to ratchet up your performance to exceed expectations in the future.
Okay. Well, thank you very much, Wes.
My pleasure.